Arthur, what do you think the year-end ranges will be for both Bitcoin and ETH?
So I'm going to stay consistent. $250,000 Bitcoin, $10,000 ETH.
$10,000 ETH. You think ETH can do more than a doubling in 2.5 months?
Yep.
All right. Tom, Tom, you dropped off really quick, but the question is end of year price targets. We got 2 months, 3 weeks before December 31st. What do you think ETH is going to be? What do you think Bitcoin's going to be?
Yeah, but by year end, our target for Bitcoin is 200 to 250,000. And for Ethereum, somewhere between 10 and 12,000 ETH.
Even higher than Arthur. So that's basically what Arthur just said.
I mean, if Tom says it, this is going to happen.
Is that not a little bit fast, Tom? So like I said about this last year of price action, especially Bitcoin over the last 3 years, it's just been slowly incremental up. If you're telling me ETH is going to do like almost a 2.5x in 2 months, to me, that is no longer incremental. That is starting to become closer to a blow off top territory, which I don't want. I want the slow incremental price rise for years. If it did do a 2.5x, wouldn't you be worried about it kind of just being a little bit too fast?
I mean, as you know, Ethereum's basically been basing for 4 years now. Just broke out of the range. So to me, it wouldn't be a blow off top, but rather seeking essentially price discovery at a new level. And then at a time when I think there would be a lot of fundamental things happening next year. So I don't think it's the top, but I'm sure, but it is a big level. Be a big level, but a happy level.
Now, we've covered Tom Lee in the past, a great crypto investor, but here we have another crypto investor and one of the OGs in all of crypto, Arthur Hayes, giving us a price prediction and a target for Bitcoin of at least 200K. We're looking at 10 to 12K by end of year, even with all of this volatility on an Ethereum. And if that were to happen to the two largest cryptos by market cap, then something like XRP could easily hit $5 to even potentially $10 in the same period of time. So we have a lot riding on the line into the end of the year as gold is hitting new all-time highs. And again, virtually every single time this has occurred to this extent, it's a signal that globally we are seeing unprecedented levels of uncertainty. First, I want to cover a couple of pieces of news directly from Ripple and then the chief legal officer of Ripple, just to keep you guys up to date. Then we'll dive into the charts. I'm really going to be focused more in on the charts with a bit of news as well. But Ripple recently posted this post talking about the biggest challenges to keeping stablecoins from becoming global money. Now, Ripple itself has their RLUSD stablecoin. We've already seen that the applications for stablecoins are going to continue to grow and expand over the next decade. That's a given. This is one of the major reasons our treasury is so bullish on stablecoins, because stablecoins will be the biggest buyers of US debt, which will ultimately keep the dollar in a major position of power if all around the globe people access digital currency and would rather hold the dollar over their own fiat currency issued by their governments, considering they're typically more inflationary than the dollar. The dollar will remain in power if stablecoins are continued to be used through all sorts of applications like real world assets and more. But then they made this post about how stablecoins are still facing some issues. And one of those major issues that the stablecoin market and crypto is facing is not the fact that we already have the Genius Act, but apparently, and we've already talked about this in the past, but just to keep you guys up to date, a coalition of global financial associations, in other words, bankers and those who are funded by bankers, has recently submitted a letter to the Basel Committee on Banking Supervision to consider a pause and recalibration of the crypto asset exposure standard. Now, their argument is that this could effectively push growing and innovative sector to operate outside the regulated banking system, undermining the goal of comprehensive financial stability. But at the end of the day, we've already learned that a lot of these committees, subcommittees, and anyone who's funding them wants to slow crypto down. I also understand that there do need to be some solutions in place to not affect our trust in these stablecoin issuers, which is why RLUSD and Ripple have gone to such great lengths to have the right regulatory procedures in place. Now, in the case of their stablecoin, okay, and what they're recommending is the fact that we need real world use cases, which are already here. Interoperability needs to be the first principle principle design. In other words, stablecoins need to be interoperable across different networks, okay, or different tokens, if you will, issuers and jurisdictions. Regulatory harmonization is the biggest barrier and opportunity. In other words, we don't need any walled garden type systems, and this would limit fungibility, which again, when we're talking about NFTs, right, in the past, these are non-fungible tokens. Well, dollars need to be fungible. $1 always needs to be able to be traded for another dollar, and they need to be of equal value. Stablecoins should be boring, which is what creates stability in the first place. And ultimately, if we're always arguing over everything when it comes to standards and different definitions, this is going to delay global usability and ultimately adoption. And because stablecoins are so important to the entire global ecosystem in the future of how things are going to run in a new financial system, if we don't get clear about things, then you're going to continue to have a lot of different stable coins in different jurisdictions doing different things, and this doesn't create for one cohesive environment. Now, I get it. We do want competition. We don't want 1 or 2 or 3 players running the entire world, but that's usually what happens anyways, and arguably it's better for scale. Next up, we have Stuart Alderodi, the chief legal officer over at Ripple, talking about how when a network is open and permissionless, no one sits at the center deciding who can participate, validate transactions, or build on top of it. This is truly what most networks should be. This is actually what the XRP ledger is, and a lot of people always make the complaint, well, XRP, or better yet, Ripple, has a CEO. Yes, that CEO is in charge of the business of Ripple, and one of their largest portions of their business is the XRP ledger, because XRP is the largest asset on their balance sheet. At the end of the day, he can't stop anyone from participating, validating transactions, or building inside of the XRPL. And so he reposted this statement from the National Cryptocurrency Association, stating that you've probably heard the phrase, Bitcoin doesn't have a CEO, which is why some people like it, and that's their argument to stay away from everything else. It's true, and it highlights the independence and neutrality of open blockchains. But it's not only true for Bitcoin. Tokens such as Ethereum, XRP, Solana, and Cardano all operate on public and permissionless networks, meaning anyone can build on them, and none of them have a CEO. I would also mention, though, it's important to note that although Bitcoin does have one very large holder in the form of Satoshi with 1 million tokens in that wallet, many people theorize that he's likely dead because not a single one has moved and may never move. Now, there's a lot of theories on who created it, how they created it. I think at the end of the day, they're all just theories. And unless we see one Bitcoin in that wallet move, we can leave it at that. It's just theories. And that Bitcoin is going to continue to grow over a long, sustained period of time. But when it comes to Ethereum, XRP, Solana, and Cardano, the founding teams are very well known. Everyone knows who they are. Everyone knows that these people have a ton of their tokens in their wallets. And so that's where it can get a little bit dangerous. Let's say Ethereum one day decides, or the foundation, or Vitalik Buterin decides to sell a boatload of Ethereum because he's extremely rich. And although he already is, there's no reason that if these price predictions and targets are hit, he can't become richer. The same is true for XRP. Yes, it's in an escrow, but that escrow is released every single month. More often than not, Ripple's being smart, they put it back in the escrow. But that doesn't mean that at some point in time, they're not going to act in the best interest of their shareholders, which is exactly what the prior chief technology officer, David Schwartz, has stated directly on X and Twitter. So we do have the receipts. I've covered that in the past. At some point in time, Ripple will sell some XRP when it comes out of escrow, which is going to create sell pressure. And that's probably the major difference that people really think about when it comes to Bitcoin. But in general, I think it's better that we have real people working on these programs and platforms to improve them. Whereas Bitcoin, because it's so decentralized in so many different ways, it's actually very difficult to get anything done on that network other than treat it like what it is. In this case, it's just a digital form of gold. But there's a lot more room for growth here because these are more like companies, even on permissionless networks. Now, that said, I think what is currently leading off to our short-term sell-off, actually after pumping or rallying off of that major volatility and dump that we recently saw, is just the fact that there's a lot of uncertainty moving forward, considering this article from the Wall Street Journal talking about how, yes, we have weak jobs, even though we have growth, and ultimately the outlook is a bit shaky, where Whereas all the economists, which by the way, I never really trust them anyways, they're all like the weatherman. More often than not, they're wrong. At the end of the day, they're all over the place. And so this is going to lead people to take the only action they know how to do in markets when they are uncertain, which is sell. Just get out. Wait until you actually see the dust settle. So I'm not going to show you this video, but essentially in this video, Secretary of the Treasury, Scott Bessent, stated that going into the third week, he believes that the shutdown may start costing the U.S. economy up to $15 billion a day. And this is the decision the Democrats are making. Obviously, he was appointed by Trump, so he's pro-Trump, which I don't want to get political, pro-Trump, negative Trump. Democrats are going to blame Republicans. Republicans are blaming Democrats. It's a tale as old as time. I am calling for the moderate Democrats to be heroes and to reopen the government for the American people. Now, the reason this is all occurring is because the Republicans are currently accusing Democrats of demanding $1.5 trillion in partisan spending, while the Democrats criticize GOP cuts to healthcare programs and expiring tax credits that could double premiums for 22 million enrollees. And I'm going to be honest with you, at this point in time, I think the truth is somewhere in the middle. And at the end of the day, all of these politicians are going to eat on a massive bill like this.